Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.
Morning, everybody. See smiling little faces there on Friday morning. So welcome everybody. This is the Do More With Your Money podcast. This is podcast number 33. I'm Diane Patterson, Head of Delivery for True Potential Group, and today I'm going to be joined by Rebecca Wright, who is Head of Client Servicing. We've got Jenny Hall. First time, Jenny, welcome.
Hi.
Head of Client Service for TPI, and we have George Bell, investment analyst within the investment management firm. So I think today we'll be covering the likes of the most common questions asked with the True Potential app. And I think we all work very closely together. Certainly, well, I say we all, certainly Rebecca and I and Jenny and I do work closely together. And I think George, as well as you're the only male on the panel today, you're kind of off to the side. You're managing everybody's money. We're managing kind of the technology side of things. And I think for me, certainly from an app point of view, I don't know how lockdown would have gone if we hadn't had the ability to communicate the way that we have through apps. And I think certainly from the medium of the big bad world, social media has been a huge kind of comfort to people, because without it, how would you have known? We would have had the news every single day, 24 hours kind of thrown at us all of the time. But you lose the communication between you and your friends if you don't have the likes of the social media apps and the WhatsApp groups and things. And I think from an investment point of view, clients want reassurance. They don't want to be sat in the dark communicating with their advisors, and their advisors saying, I don't know, I can't get in touch with anyone because there's no telephones, there's no technology. And then here we are in 2020, where we're inundated with technology and mobile apps and social media. And I think that's being able to give people the confidence to see them through to now this point in lockdown. To be honest, I don't really know what this point in lockdown is. It just feels like it's all gone crazy. But I think from an investment side of things, George, if you wouldn't mind just giving us the highlight of the investment management point, please.
Yeah, sure. So I suppose, technology is an important theme of what's been happening in markets this week. So if I just kick off with a bit of a market update, that might give some context to what I'm talking about here. So lots been happening. And if I look at the developments since our last podcast, especially on the economic front, we've had PMI data coming out around the world, which was generally very positive, which put some wind in the sails of global equity markets overall. PMI, that stands for Purchasing Managers Index, which is really a leading indicator. So it aims to capture future business conditions across a range of different industries and sectors there. So to get this, surveys are carried out across purchasing managers, range of different supply chains, and what they're looking at there is new orders, how much stock firms are holding, production levels, deliveries, employment. So overall, that gives a gauge of the direction of economic trends in both manufacturing and services. So why did markets react positively to that? Well, because they're showing signs of further expansion, so further recovery there, which is a good sign. Here in the UK, we had the nationwide house price survey, which showed UK property prices rising at their fastest pace in 16 years, which now takes the average property value to 3.7% higher than where they were 1 year earlier. So the recovery in demand for property primarily led to a positive response from the share price of home builders here in the UK. In terms of policy, and there's been a lot of focus around policy in recent months, and we've talked about this in great detail on the podcast, but it's back to the fore. And on the international stage, I think attention's been back on hopes of further stimulus from central banks who've already offered incredible levels of support this year. This time it was the European Central Bank. And I think why, that's an interesting point. Eurozone consumer prices fell in August for the first time since May 2016, and retail trade in Germany fell back 0.9% through the month of July. So that was suggesting a bit of a slowdown in the pace of activity after the post-lockdown surge which we had in May. So central banks, policymakers, very much data dependent at this point. So all of these data points are really important. It led to a bit of debate around the effectiveness of some of the policy which has been enacted so far. So in Germany, we had a cut in VAT, which was a temporary cut. It's early days, to assess the effectiveness of that. We're talking about a decline in retail sales in just the month of July. That policy was only put in place in July. So assessing the effectiveness on 1 month, I'm not so sure. But in terms of fiscal and government policy, France, they pushed on with their plans. So they unveiled on Wednesday further detail around the French relaunch package, which again, an eye-watering sum of money. We're talking about 100 billion euros there, which is not so much an emergency package. We've already had that. This is all about filling gaps in infrastructure. So Macron is, he's got 2 years until his election. So he's really putting in the groundwork at this point in time. We talked a little bit over the last few weeks about investment in infrastructure. That's something which we've seen from many places. So after they've had that initial boost from stimulus packages, starting to see plans to sort of pave a longer term recovery. We've been talking to the teams in China through one of our fund managers who demonstrated how they've been investing heavily in infrastructure in areas such as healthcare, recognizing the stress test that COVID-19 put on economies and recognizing areas where they could improve over the longer term. The US, and we're moving on to the interesting parts now, as we move through the week, the US demonstrated resilience, shrugging off the ADP jobs report, which fell marginally short of expectations. Marginally, the jobs report showed that private businesses hired 428,000 workers relative to an expectation of 950,000. So slightly off the mark there from analysts, but most of the job creation, as you may expect, unearthing from lockdown, came within the service sector. So it was in areas such as leisure and hospitality as people unearthed from their homes. Though the analysts were disappointed, the data did demonstrate a continuation of a path to recovery. It's still a significant number of people returning to the jobs market, but what it does bring into focus is the requirement for Congress to overcome the impasse on the additional fiscal package, which is hugely political and is being washed around all of the different tabloids at this point in time. Yesterday was interesting, so I had some notes written down here, Diane, and I've updated them this morning. Yesterday was an interesting...
good notes or bad notes, George? We'll soon had to update them.
We'll soon see. I think, there's a lot to be taken from it. We saw some turbulence within the technology space up for this session today. With the NASDAQ, that came off around 5% yesterday, but still up 43.6% over the year. So given the focus on tech firms at this point, any change in sentiment, that has a bit of a disturbing impact on global markets overall, as we saw in Asia overnight, early this morning in Europe and UK. But at the time of recording here, just looking at the screen, we are seeing some signs of improvement there. But those impacted to a lesser extent yesterday, areas such as transportation, which, talking about the NASDAQ, which is primarily technology firms, that was down 5%. Transportation was down just around 1.9%. Banking in the US was actually up at the margin around 0.02%. Technology stocks, as we mentioned there at the start, how much technology has benefited us during this time. It's been in great demand for many years. It's had a turbocharge in 2020, and we'll discuss many aspects of this today, but just to add to some context to those points, if we look at the difference in performance of the tech sector in the US relative to, say, materials year to date, we're talking about a 31% differential in performance. Over the 1 month, as economies start to reopen, you've seen that differential narrow slightly, so you're looking at a gap of around 5% at this point. One of the reasons they were spooked yesterday is essentially put down to the market perception of that they were becoming too expensive, with participants in that market starting to take some profits from what's already done very well. Just to put some context on, valuations, we've mentioned this a few times, but just to show you what we're seeing, we were talking to one of our managers recently who demonstrated, and this is on a global basis, the top 1/3 most expensive companies are trading at a 260% premium to their market average, whilst the cheapest 1/3 at a 46% discount. So significant divergence between the most expensive and the cheapest in terms of their performance there. And only this week, we saw the headlines. It was publicized that the market cap of Apple alone had become greater than the total value the top 100 companies listed in the UK. Now that's a big story. That's a demonstration that there's certainly been a lot of demand for tech stocks in particular. They've also had that stock split, which led to an initial rebound or initial drive in the share price there. What it's meant is we've really seen a broadening out of sector returns, or thinking more broadly, broadening out of styles. You know, we think of these styles in the different sectors which they typically attain. Looking at the Bloomberg screens in our afternoon call yesterday, you know, as we were watching the US market, we found it fascinating just how quickly share prices can react to such expectations. I think in terms of the true potential portfolios, you know, we've had exposure to technology directly and indirectly. So we've been beneficiaries of that longer term return. But what prevents the whipsaw effects when markets change their mind is being not overly concentrated and providing our investors with that diversification. So a lot to be taken from the markets this week. I've tried to summarize that as best I can. So thanks for staying with me there.
That's all right, George. I think it was always going to be the case, wasn't it? As soon as the world knew that you were on this morning's podcast, it was just going to throw you a curveball, and there was nothing you could do about it there. But I do like the way that you seem to multitask. You said, I'm just looking at my screen and watching the markets. And I was thinking, this goes against what people say about men. You've got 3 women on the podcast. Men aren't supposed to be multitasking, and you seem to have that off hat. So well done.
I'm here to prove them wrong.
Exactly, George, and why not? I think what's interesting for me is certainly the property side of things, because I think we're probably all well aware of what has happened in lockdown in terms of the freedom of movement, and that there largely wasn't any to begin with. Poor Jenny had to postpone our wedding. I've had friends that were desperate to move house and weren't able to. And then there was the kind of the terror of, are the properties going to be worth what properties were worth 2 months ago, 3 months ago? Who's going to be better off, the buyers or the sellers? And I think where you started there is that obviously property markets have there has been growth within there, which is, I think it's great for people, because people do tend to put a lot of weight within their property. So you'll have a mortgage, and depending on your forever home, you may intend, that might be your pension, if you like, or it might be a portion of your pension when you come to think about your assets and where your finances are. And I think from that, you don't necessarily know what the worth is. So it's not like you can just go onto an app and go, what's my, yeah, I mean, yeah, you can. There are places that will give you a valuation, but it's based on historical data and it's based on previous sales. It's only really worth what somebody is prepared to pay for it. And I think with your investment side of things, it's nice to be able to see what you are kind of liquid worth, if that makes sense. So you'll have your, well, I mean, you 3 have all got a long time to retirement. Me, a little way left to retirement, but not as long as you have. I'm now really beginning to look at my pension as opposed to my ISA, because I treat my ISA as immediate money. So if I do need it, I know that I can get it within a certain amount of time. But the pension's the thing now that I'm increasingly putting more money in, because I don't want to be able to have access to it, because, well, that's not great for me or my future, if you like. And I think just to bring with one of the questions it is quite commonly asked, how do I top up? Like, what do I do to top up my investments? And again, I know we've spoken about it a little bit, who am I kidding? impulseSave. impulseSave's been around for a long time now, and we actually went over to a fintech exhibition in New York to announce it to the world, and we're still the only people that are doing impulseSave, which is, it's mind-blowing really when you think all people want to do is to be able to invest. Those that are certainly emotionally in it as well want to be able to invest their money as quick as they possibly can. And from our point of view, impulseSave is the easiest way. Yes, you can have direct debits and you can make bank transfers, but impulseSave is largely onto your app, money into your investments, boom, kind of done. So I think, Rebecca, rather than, because we've had quite a bit of George, which everybody loves, quite a bit of me, I think if you can just take us and just explain to the new guests to the YouTube channel, what is the process for using impulseSave on the apps, please?
Yeah. So super easy, available in client sites as well, but even easier if you can log into your app. Most users on our apps log in using biometrics, so they either scan their fingerprints or facial recognition, and that gets them in nice and easy. From there, you're going to see a top-up button as soon as you log in the bottom right-hand corner, and this top-up button is available throughout the app once you're logged in. Select top-up. From there, you're going to choose the relevant policy. You can select the value that you're choosing, so it can be as little as £1. That money is going to be taken off a debit card. If you want to, you can save that debit card, so next time it's even quicker again for you. And that money will be taken from your card, and within 5 working days, you'll be able to see that invested within your chosen policy, your ISA, your pension, etc. What many of our clients also do is they're looking at their goals. So in your app, you can see the difference between your goal amount and where you are currently. So a lot of people use impulseSave as a feature to close that gap to goal. So they're looking at how far am I off today, this week, this month, and then they're topping up the difference to make sure that they're continuously on track to get where they want to be.
Which is great. I think my gap to go, now I don't know whether my goal is just completely unachievable or whether I seriously need to start saving more money. But I think I'm probably one of those people that you don't follow my lead in terms of how I manage my money in that way. But I think, welcome, Jenny Hall. You've been quiet for quite some time there. How do you use the app personally? Like, do you use the app, or are you more of a website kind of person?
Absolutely an app, and main reason is ease. As Rebecca said, you know, it captures your face. You don't have to remember what your password is or your passphrase, which I'm terrible for. But for me, the gap to goal it's an amazing complement to impulseSave. It's a great reminder for checking the balance of your investment. So, logging into your app, checking what it is, but also monitoring against your target. I would say that for my ISA, I'm a lot closer to, my target than my pension. So, when I frequently log in, I tend to try and plug the gap in my ISA. That at the moment is where my focus is. Whether it should be or not, that's a different question.
Let's not get into advice.
No, but I'm quite sad in the fact that I tend to like to round up. So, if I log in, I tend to log in about 3 times a week. And I'll log in, and if I see, I'm like £1.60 off the next kind of rounded up figure, I'll sit and I'll impulseSave that. So, it doesn't really sound like a lot, but if you're going in 2-3 times a week and you're putting in, and £1.60 was a small amount, but, you might end up putting in, I don't know, £10 or £20. It does all add up, and it helps you close that goal to what you've set as your financial plan, what you want to get out of that account. As mentioned, my pension is a little different. I'm a long way off retirement, if I ever get there. But
Yeah.
One of the good things as well is, though, that I contribute via my workplace pension. So it's not like I'm totally disregarding, the pension or not thinking about it. It's just going to take me a lot longer to get to the target that I need to. But again, logging in and checking and looking at what that gap to your goal is, it just keeps you interacting and invested, interested in what you're actually doing, what you're saving.
I think you're absolutely right. I think there is, I don't know if obviously you are, again, I'm just coming back to this age thing, younger than I am, but if you think back to kind of penny jars when people used to save, or the people would put 5 pences in a jar or like a vase or something, the lid that would be so small, they used to put, and then you'd count them out, and you'd be amazed as to how much you'd actually managed to save just by putting those little pennies and 2 pennies and things away. And I think you're right, that's the brilliance of impulseSave. You start with £1, but you could do £1 and a penny if you wanted to, if that was necessarily all that you needed to get you to fill the gap to your goal on that day. Then yeah, you're absolutely spot on. Why not just top it up by that amount so that you can see in days or weeks or months just how much sooner you could retire? Because it'll also tell you that it will say you want to retire 3 days sooner than you could.
Or how closer I am to buying that new handbag. I'll leave that one open.
Absolutely, yes. So
that idea of the goal is really important, though. I think I totally sort of understand that and can familiarize that. I think coming into lockdown, unable to travel so much, unable to go out, eat out, go to the pub, which I think when I looked back, I thought, blimey, how much did I spend there? It keeps that focus on what your goals are, so you can actually see that and actually think, well, actually, rather than letting that money which I've been saving just dwindle away and somehow end up in the sort of spider's web of living costs, actually putting it towards what you really want to achieve and keeping that concentration. And the app lets you do that. It allows you, it's fully centralized, so you can see exactly what's happening within your investments, and you've got that tool to go in there and top it up, which I think in this environment, with pound cost averaging, all these small top-ups which we talk about, they have a compounding effect overall, and that's a very powerful thing.
Well, actually, George, that's a really nice segue into what is now one of the other most common questions, which is, how do I check the performance of my investments? So I think before I'm going to come to Rebecca and ask Rebecca what she gets and how she would explain that to a client. But from a fund manager point of view, George, how do you work with the fund managers to provide the underlying asset allocation?
Yeah, good question. So the overall asset allocation of the portfolios is built up by the different manager partners we work with. So within the portfolios, we work with some of the biggest investment houses in the world who each provide funds for us. So we're working with those managers to gain that asset exposure. The decisions which we're taking on the True Potential team and within our portfolios is primarily around the allocation to those managers. So how much do we want to have with, say, UBS, how much with Goldman Sachs? So making those changes, because they all do bring something different to the table, ultimately adjusts the overall asset allocation. That's what we keep clients up to date with. So clients through their app, they can see the asset allocation of their portfolio. They can also see the changes which we've been making on a monthly basis. So we provide a commentary in there which will say, this has been the performance of the portfolio over the month. These are the drivers of performance. These are the changes we've been making. That's an important point, because some months you may look at that and there may be no change and you may think, well, what are they doing there? Well, I think, we're working with active fund managers. So on a day-to-day basis, those managers we're employing, be it UBS, be it Goldman Sachs, are making changes within the market. They're looking at the opportunities out there. They're looking at the risks out there, and they're developing the portfolios in line with that. So my job as an investment analyst is to keep pace with that. So I observe what the managers are doing on a day-to-day basis, the trades they're making, how they're performing, because ultimately what they're doing under the bonnet is changing the shape of our portfolios. We have monthly meetings with them. We have regular contact with the managers, so we can understand, okay, this is where the portfolio was, this is where it is now, and this is where you go, and this is your market outlook, and this is what you would look to bring in. So if we're comfortable with that, if we feel that is the optimal outcome for our portfolio, we'll keep that allocation the same. So in the commentary, if it says we've kept the allocation the same, don't worry, there's a lot going on under the bonnet. We've still gone through that whole investment process to make sure that our portfolios are built in line with where we feel they should be for the longer term expected returns there.
Absolutely. It's about I suppose the assessment of the worth of the assets that sit within there, and the lion's share of where something is going to perform better in one sector as opposed to another. And like you say, if there's no change, doesn't mean nothing's happened. It just means that that's the most appropriate from this point in time. So
no change is an active decision.
Exactly. Yes. So Becca, how would you articulate that to a client then when they do call and say, how can I check my performance?
So we would explain to our client how to go into their app, how to get logged in, and we would then direct them to the performance charts, which were within the app. And I think one of the great things about our app is a lot of the time you go into different apps and you might get the overhead figure, you get what is it worth today. But we pull all of the charts which are available on the client site and we put them in the app as well. So the app doesn't have a restricted view. And we would show clients how you can hover your finger over this chart and you can see every single day, this is how it's performed. Has it gone up? Has it gone down since yesterday? We'll show them how to edit those charts if they want to look at different ranges, etc. But we're going to give them that visibility and they can click into that. They can look at it per policy if they want to. They can go in and get a little bit more detail. But as soon as you log in, that chart is one of the first things that you're going to see.
So you essentially have a hierarchy, don't you? You have your overview, then you've got your policies, and then you can drill down to see, yeah, your underlying funds and how they've performed if you want to take it to that level. And I think, as George mentioned, with the Apple side of things, I think everybody's going to be interested if a global company is making like those kind of headlines, and that positive headlines as well, because 9 times out of 10, if somebody's making the headlines, it's not for a very good reason. Whereas if they're getting headlines like that, you know what, it is going to draw people to their investments to see what it means to them. So with that then, Jenny, in terms of the numbers, what do the numbers mean to the clients?
So I think the first thing to point out is we've obviously spent a lot of time developing these the client websites, but also the mobile apps to kind of show clients exactly what they want. You know, I think certainly for me, when I tend to log on to other apps, I get a lot of information that I don't want or I don't need, and it's kind of just because that's what people think they want to see, as opposed to knowing that that's what we do want to see. So as Rebecca mentioned, you know, when you log in, you see your total net worth, including your assets and liabilities. You know, it shows you the total value of the investments as well. The site is great for showing the performance of the two values on a percentage basis over a period of time. And you can select to kind of show whether you want to look between 2 different dates or a set period of time. So that's great. And I think especially, you know, being able to kind of click in one button, you know, 1 month, 3 months, you know, 6 months. It's great not having to put those specific time frames in, or kind of looking through transaction history to try and work out what's changed over that period. I think as well, in addition, the great thing about it is that you can see the underlying performance within the client site, so of the underlying funds. So it's not just, you know, where George may refer to the true potential balanced portfolio. It's, you know, the actual underlying funds that sit within that portfolio. So it's going to show you kind of, you know, the changes to those specific funds as well.
Yeah. So, George, how would you go about articulating what a buying opportunity is for? What would a client look for? So I'm logged into an app. Everybody knows in the retail sector, you get push notifications, you get emails to say, do you know what I mean? We've got 20% off today, or for the next so many hours, you can get 10% off if you use this code, or you do. They drive people to spend money on their websites and apps. I mean, I never fall for that stuff. Don't misunderstand. I'm never sucked in by an opportunity sale. But so in terms of kind of investments in markets, what are the buying opportunities, or how would you articulate that to a client? What would you say at this point in time, a buying opportunity, you would look for this?
You might be surprised by my answer, but time in the markets is an incredibly difficult thing to do. Yeah. You know, if we think about, you know, you look at a market, before you know it, it's moved. You know, hence the reason I had the screen behind my laptop this morning to keep an eye there. I think the importance, you know, what's an opportunity? Well, think about your goal. Think about what you want to achieve. Think about where you are relative to that goal, and think about, you know, your circumstance. If you've got the ability to get closer to that through a top up. I think, you know, time in markets in terms of looking at what certain indices are at and working on that way. You know, overall, you know, we've had a significant market event this year, and there was a lot of opportunity in that. But think about your goal. Think about where you are relative to your personal investment goal, and work towards that.
So I think as well as don't be. I know this might sound quite contradictory, because obviously you need money to live, and I think when people see their investments in a market, a bad market situation, people see their investments begin to tank. They'll panic. They might, do you know what I mean? Right, I need to get my money out. I can't lose more than I've put in. It's not going to be worth what I need it to be. And obviously they can use their apps and they can use their websites to stay up to date with that. So with that said, we have spoken quite a bit about impulseSave. And there are other means, of course, to top up. If you have an existing investment with a particular provider, you can transfer it into your true potential portfolio by using the app or the client website. But we haven't really mentioned a lot about kind of direct debits. So again, me and Jenny saving the pounds and the pennies through impulseSave. Rebecca, if a client was to come to you and say, how I want to top up, and yes, I know how to use impulseSave, I've used that, but is there a more kind of structured way? How would you recommend that they do that through direct debit?
So direct debits can also be set up through their site. So we would suggest that a client logs in and they click into the policy that they want to pay their direct debit into. They can pay direct debits into multiple if they wish, but select their chosen policy. Once they're in that policy, you're going to see all of the overhead information, which Jenny mentioned earlier on, so that performance values, current value, etc. And just underneath that, you've got edit monthly investment. Client would click on that, and it's just a straightforward fill in your banking information. So tell us which account you want us to take that money from, check the boxes to agree to the mandate, and then through you go. Tell us which date you want us to take it out on, and that's it all done. It's that easy.
Yeah.
And then we'll continue to take that on your chosen day every month going forwards, unless you tell us otherwise. And it's probably worth mentioning as well, there's also some tools on the site. So if you're not quite sure how much you should be paying in, if you've got a target in mind and you've not quite decided how much should I be paying in per month to get to that target, there's projection tools on the site as well, which can help you figure that out.
So George, what difference would that make to a client? So we might have clients that have multiples of hundreds of thousands of pounds that can invest them immediately, and that's kind of one lump sum. And then you've got those direct debits or the impulse saves coming in consistently into a client account. What difference would that make to the client's investment value?
I think it comes back to, I mentioned pound cost averaging before. I think it comes back to that. If pound cost averaging, there's many different definitions. Some of it looks at regret aversion. So if you were to put a significant amount of money in at the top of the market, then the next day you may feel a little bit disheartened. Putting it in incrementally, so using whether it's a direct debit or using impulseSave, however you want to access that, you've got the ability to access different unit prices over different points in time. So it can be a powerful way of compounding returns over the longer term.
Great. So it's always beneficial. I think obviously we work in finance, we hear this daily, and it's beneficial for clients to invest consistently just to keep the momentum going as well, because I think it's like anything else you do. If you get out of the habit, it's really hard to get back into it. Whereas as soon as you see your investments or your savings, as people would refer to them, begin to grow, you tend to begrudge then doing anything with it. You might have it earmarked, like Jenny's saying, she might have her interest closer to her ISA goal. I'm not going to ask what that is. Closer to her ISA goal than her pension goal. And I think that's because often you do look and see your pension is, like, retirement age is so far away that you have an immediate goal. And I think as soon as you can see that you're getting closer to that goal, you do want to keep up the momentum rather than just kind of letting it all go. So Jenny, how do you feel about that side of things from an investment point of view?
From an investment point of view, I think the direct debit is great. I think it's a consistent way to save into, whether it be a pension, whether it be an ISA, whether it be a general investment account. It's kind of having that structure within your monthly kind of your income, really, to what you spend, to put it in and consistently save. And I think from an investment point of view, from the processing side, as soon as somebody goes onto the website, like Rebecca's just said, and they request that they want to start contributing, there's no person kind of behind the scenes here at TP to kind of sit and manually enter all those details into the system to set up the direct debit. It's all done kind of through the interface with the work that your development team do, Diane. And that kind of means that it's straight through processing, so it's not going to take us 5, 6, 7 days to think about I've got to get round to this client's direct debit to set it up. It goes straight through. So I think that's a great thing for us as well. But what I would also say, and I'm going to go back to impulseSave, so apologies.
That's all right. That's up to you.
I think as well, the great thing about impulseSave is that if you do have that little bit extra, say at the end of the month, and I think we'll all probably agree that I've not been commuting to work, so I've naturally saved petrol money over the time we've been working from home. So having that little bit extra that really we've got nothing to spend on because we can't go anywhere, we can't do anything, that's kind of what's been going into my ISA as well, but via impulseSave. And, you know, you may feel that, you know, you can't commit to that every month, but that 1 month you can. And having impulseSave there, it allows you to kind of, it probably pushes you more to say, okay, I am going to put that into my ISA or my pension, as opposed to thinking, okay, well, it's only for 1 month. I'm not going to bother anyone by saying, okay, you know, hi, True Potential, please can you change my direct debit for 1 month because I've got an extra £10 or £20 or £50. So again, I think impulseSave again comes into its own.
Yeah,
I
absolutely.
should have said petrol money. I think I said pub money.
Well, George, there you are, you see. But I do think between the two of you today, we do have now the fundamentals for a little campaign for Dan. So what we can say is, Dan, look, this working from home thing's really good. We can all save more money and put it into our True Potential investments because we're saving on petrol and George is saving on pub money. And when you think about it, though, I mean, as much as, yes, we're here today to talk about the True Potential apps and the most commonly asked questions, when you look at the apps and how apps have just, again, I mean, there's always been like the gaming apps and you can solitaire and things that you can download and the music apps, and there haven't really been that many. Yes, you can go on and you can get your the comparative websites that if you log in and you put your password and things and you give them your location, they'll tell you which restaurants, if you go to a different city, which restaurants might have deals on at the minute. But that's largely it. It's like, oh, Wagamama might be having 20% off today. Whereas now I think when you go out, now you are you have to download their app, certainly to restaurants and places that I've been to, because now they don't want to talk to you either. It's like coronavirus has said, just stay away from everybody. People, nobody wants to see your face and nobody wants to talk to you. So you are now kind of having to use an app to order drinks, to order food, to pay as well. And I just wonder what 2020 would have looked like, where we would be now without technology like that. I mean, are there any other apps that you guys use that I wouldn't necessarily be aware of? What with me being, I know, the older one of the group.
I definitely don't think so from me. I wouldn't say I'm great with technology, but
So
I think probably the main apps that I've used are kind of the likes of the ones for, you know, booking restaurants, or, you know, paying, or really my weakness, you know, shopping apps. You know, I've tended to not really go out where I've had to. So the likes of, you know, Next and Zara, they've definitely got me on some kind of radar, or they'll have me on a blacklist soon for how much I order in return.
Yeah.
But no, I think, like I say, I'm probably not a good example, to be honest. I've been quite quiet on apps.
Oh, what about you guys, George?
I think, well, all my shopping, all my purchases are done through the apps now. I think there's, you know, things which I wasn't expecting to be doing, things like, you know, star jumps in my garage with Joe Wicks through the app, which, you know, I used to use
There's
at
a
gym,
site
but
that
now
people aren't going to move on from very quickly, George.
So yeah, I mean, where would we be? I mean, as a millennial, it's hard to imagine, you know, previous pandemics. What did they do without, you know, TikTok and Zoom and all of these different things? But you know, it's been massively important. You know, especially, you know, we're very fortunate at TP that we're ahead of the curve, that, you know, we did have the app. So, you know, a lot of the stress which has been caused in many of the firms around keeping that client communication going, you know, we've already had that infrastructure there. So it's been straight through the channel on a regular basis. But yeah, socially, star jumps in the garage.
Yeah. Rebecca, what about you then? Is there anything that you found?
I think much of the same, Diane. A lot of kind of Zoom and video phone calls with family and friends, which family quizzes is something that I don't think I'm going to be missing, because helping the elderly relatives get logged into Zoom and then have to put cameras and microphones and things on was interesting, to say the least. I got asked at one point why I had a glass of wine so early in the afternoon.
Yeah. Because of you, people, it's all your fault.
But health and fitness ones as well, as George says, you would think that because gyms were closed, that trainers would actually have really suffered through lockdown. But actually, a lot of them, their businesses are thriving. A lot of them have never been I don't know if they've never been busier, but they're certainly busier in a different way. They've got more clients than what they used to have subscribing to their Instagrams, or a lot of them have got kind of paid services where you actually have to give them money in exchange to join these Facebook groups that they've set up, things like that. And it's so yeah, a lot of that. I say a lot of downloading that, not necessarily a lot of doing it.
Just watching it. I'm just doing a recce. Will I do this tomorrow? Probably not. Next.
Exactly that, yes.
I think that the way you touched on there with the elderly as well, I think we do now we massively rely on technology, and it's just becoming more apparent as we go on. This is not going away now. It's the new, we still don't know what the new world's going to be, but we know it is going to be largely an application side of things, because people are moving away as well from PCs, desktops and laptops, and people are now much more concentrated on the mobile devices. And it's a little bit of a worry for me. And I kind of say that flippantly, but not in the same vein, because Rebecca, like you said, helping the elderly with downloading the apps and getting used to them. My mum's 86, so when lockdown very first happened, she was largely on her own. And I mean, honestly, God love her, we did a WhatsApp call. So we tend to not do video calls. I say it frequently anyway, but honestly, so she was at the bottom. I would get to see her forehead, or I might see her chin. I was like, Mum, you have to turn. And she's got my old Samsung phone. So with George just saying earlier on that Apple is this massive market leader, there are obviously, I think they've got something like 70% of the market share within the mobile phone side of things. Now, I'm an Android user, and I went to Huawei last year. Look at the shaking of the heads there, honestly. And I gave my mum my old Samsung device, and the battery now on it is really beginning it just discharges consistently. So she's having to charge it through the day as well as of an evening. So what I tend to do is I'll upgrade and give her my old phone. And now with everything that is going on around the world in terms of 5G, the technological side of things, Huawei, are they invading everybody's privacy? Are they not? I genuinely don't know what to do with this phone. I don't know whether to give it to my mum, because is it going to be rendered useless at some point? Is it worth her just hanging on to that phone and me then upgrading to a more kind of, not secure, I would say, but a more reliable kind of device than the Huawei phone that I have? And I have to say, I'm loath really, because it is a fantastic phone. And again, but if I can't download the apps that I need because I'm not allowed to download them, or the developers aren't creating them because of the device, look at the smirks, yes, because of the device I've got, then I'm going to be influenced to have another phone. And I'm wondering how many other people are going to suffer the same. But I mean, what do you do about it? There's not really much. You've got like propaganda one side and propaganda the other. You have to go on and do your own research to try and understand what is best for you. And I think with that, so we will have people, hopefully, watching today that might want to know more about True Potential, and they might be sat here going, well, what's that all about? I can impulseSave and I can view all my investments. And I think one of the other things as well, our clients want access to their money. We know that because we can see them logging in. We know how often they're logging in and the frequency in which, Jenny, you get queries, and Rebecca, you're the same. And George, you come on daily sometimes and weekly to talk about the markets, and that's not just for the benefit of our health. It is because people want to hear it. And certainly one of the things that people want to do is they want to access their money when they hit pensionable age. They want to be able to say, right, I want to start accessing the money that I've put away for the past 20, 30, 40 years. So how do I do that? And a little while ago, we developed the online process whereby instead of people having to come to Jenny, where Jenny's team would have sat and gone through a huge amount of questions with them to assess what it was that they needed and try and provide them with that, we've got an online drawdown process now that will allow clients to go in and say, right, I'm of pensionable age, I've got X. I can now say that, having used the apps and the websites, I can now say that I've kind of fulfilled the goal that I had. I now want to withdraw that money and have it see me through to, hopefully, but awfully as well, the point at which I no longer need any money. So yeah, we released the drawdown project. It will take clients through a series of questions, and based on whether they want income or a single lump sum, it will then say, great, thanks very much, you've answered everything that we need to know. We will now make that payment or those payments to you on this. So Jenny, from a TPI perspective, has that freed up any of your research? Like, what has the advance in that kind of technology side of things done for you and your team or teams?
It's been incredible, to be honest. It's something that I feel very, very passionate about, because, like you say, we can transfer money so easily on our banking apps now. Why can't we do it for, or go through the same process for, our pension? And I think taking the process away from, having to speak to every single client on the phone. Some clients will still want that, and that's absolutely fine. But for the majority of our clients, they do just want to kind of log onto the client site and, request the money. It's allowed us to free up a couple of members of staff, to be honest, which has allowed us to start focusing on different projects, which has been fantastic. It's all about enhancing our service and our processes. But kind of with regards to the process, like you said, clients can do it all online now, so they can stipulate whether they want an income payment or a tax-free cash payment, or whether they want both. It's still got all of the same information on, so clients are still reading kind of, the risk warnings, so, telling clients about, the effects that it might have if they look to take money out. But kind of on a time frame side of things, clients are still they're probably getting their money quicker, because we're not having to wait for post to come back into the office or for it going missing with Royal Mail. So I think that the time scales have changed massively. So where we were probably looking at about 20 working days, possibly best case, we're now looking at kind of like 10 to 14 working days, depending on whether you want in tax-free cash or income. So not only has it changed for the clients from a how they view it, kind of, or not having to speak to somebody on the phone, but actually going through their app. It's also changed how quickly we're able to get their money to them, which ultimately, if somebody wants money out of their account, you don't want to be waiting 20, 30 days. You want it as soon as you can have it. So definitely it's been absolutely fantastic for us, and hopefully better for clients.
Yeah, I mean, I suppose, Becca, how have clients taken that?
Clients love this process, Diane. So going back to the old sort of telephone process of booking in an appointment and having to go through loads of different questions on the phone, you've got an immediate delay there in that you have to book an appointment in. Yeah. So you have to wait for someone to have that conversation with you and take you through those questions. And it's quite important to note that it is a heavily regulated process. So we have to ask all of these questions. We have to book in with a member of staff who's fully trained to go through this process, and we've signed off for it, and that can cause a delay. Whereas putting this on a client's website, we click a button, the client can log in immediately, and that information is immediately accessible for them. So that telephone appointment, it could have been a next day appointment, it could have been an appointment later the same day, but regardless, you've cut out that wait time. The client's available now. We know they're available now because they've called us and they've told us that they are. So they can go ahead and they can do it now, rather than having to make themselves available at a different time of day to have this phone call. It's a much more straightforward process. The client still has access to a support team in the office. So if they want someone to stay on the phone as they go through that process, either if they've got queries about the questions that were being asked, or even just for a kind of a helping hand, a bit of a safety net, someone's on the line with you, we're there to do that. There's live chat, there's video chat available all throughout our client website if clients want to speak to us throughout that process. But clients really do love it. They love the ease of it, and we get very, very few clients request a telephone appointment now versus going through the online channels.
Yeah. So how else would clients, if they wanted to get in touch, how else would clients get in touch with the head office teams?
So quite a few different ways. They can call up, so the old-fashioned way, they can pick up the phone and they can speak to us.
Old-fashioned, I love that.
Well, compared to some of the other chats, I think it probably is. So pick up the phone, give us a ring. What I would say is that the team are very quick at answering client queries. So I know often when you're thinking about ringing a company and you think, I'll listen to sort of awful hold music for 20 minutes before I speak to somebody, and then they'll stick me on to someone else, and it just fills you with dread. You're not going to get that. We try and answer as many phone calls as we can in under 60 seconds. So we answer over 95% of our phone calls in under 1 minute. the average answer time is actually only around 15 seconds. So it's a really quick service that you're getting through to, and the person that you're ringing will be the person that handles your account. They're going to have access to that information when you call up. You're not going to be passed from pillar to post. But if you'd prefer, you can also speak to us through your client website. So I mentioned there that you have live chat, so you can click on the live chat in the bottom corner of your site. You can do the standard live chat of just text, typing it in, and someone will write straight back to you. Actually, usually even quicker than a phone call. We answer those in less than 15 seconds. But also through that same live chat box, there's a button there to video chat. So if you would rather, you can cut out the typing of the message and you can click video chat. Someone's going to pop up on your screen. You can see them on your screen regardless, but this is going to enable audio. You'll have the option to put your own camera on if you want to, although that's entirely optional. But you can have a telephone type conversation, an audio conversation, or a video phone call with a member of the team. You're going to be able to see them and you know exactly who you're speaking to, and they can deal with your query there and then. You've also got the option of sending a secure message, which I guess a little bit like an email, but the difference is that you're sending this message through your client website. So it's all encrypted, it's all very secure. You can send us documentation through that, information that we probably advise you against putting in an email if it's sensitive. But you can pop it into a secure message that comes through to the team, and we aim to answer any written communication such as that within 4 business hours. So you're still getting a response same day in most cases. It's a very quick turnaround, but if you need something quick, jump onto a video call with us or pick up the telephone and give us a ring, and you'll be speaking to us typically in less than a minute.
Which is, when I think about the video chat side of things, yes, I know we implement it, but from a development point of view, we will take your requirements, we'll give you then what you want, and then we move on to something else. We might be working with Jenny one day, you, Rebecca, the next, George the next, and we don't really see the after effects of what is promoted. Yes, we can look at the stats and we can look at the data, but we don't know what that means. But from my point of view, there are very few websites that I go on, and I would say even financial institutions even less so, where video chat's available. A lot of them, yes, now have frequently asked questions, but if they're that frequently asked, you already know the answer to them, because 9 times out of 10, the answer is going to be the same wherever you go. There just might be a different time frame within there. But I'm yet to come across a site where I can video chat with someone. I can live chat, but video chat, I think, when you think of the security that it provides for someone as well. Now, don't get me wrong, I'm not saying anything is 100% secure, because there will always be the opportunity for somebody to be cleverer than anybody else is. And do you know what I mean? We've all suffered at the hands of having an email address, kind of the data has been sold on somewhere. But from a secure point of view, what I mean is it'll give clients the confidence to actually see who they're speaking to, and you can gauge from people's body language, their reactions to your questions. If a client's worried, you can probably tell in their face that they're worried, but you might not get that over the phone because you don't know whether their voice sounds worried or not, because you don't know them personally. And it's just one of those things that I don't think that we make enough about, really, is certainly the video chat side of things.
And you're so right on clients maybe being a little bit wary there, Diane. We had so when you first start a live chat or a video chat with us, you'll be asked to enter your name, and then we ask you to enter what your question is, so that when that message goes through to a member of our team, they already know who you are and what you're querying. It allows them to answer your question a bit quicker, make sure you've got your records available, etc. But one of the questions that we had in the questions box recently is, are you real or are you a robot?
Oh, no.
So that was the no questions about their investment or anything like that, just are you real or a robot?
Okay, thanks, bye.
Which, as soon as that message was assigned to a member of the team's face popped up. So the client gets that reassurance that actually you're not a robot, you're a real person, or at least you look like one. And you can just have an open conversation with the client. You can say to the client, if you'd rather not chat like this, we can have a video phone call. It's close as you're going to get to seeing somebody in person. And especially because more and more people have got used to video calling with family and friends whilst we were in lockdown. It's a service which many more people are starting to go towards just naturally. People would rather have a conversation in that way in most cases, rather than just an email or a telephone call.
People do tend to be a little bit more aware, certainly now when it comes to finance, certainly financial institutions. you don't trust anybody, you wouldn't give anybody your data, and you don't want to just type something into a website, because whereas now I think without COVID, so again, everything has its minuses and its positives, but without COVID, people wouldn't, I mean, Zoom wasn't taken off at all. You've seen Zoom has just gone through the roof, as has Microsoft Teams. And again, that was something that they were struggling with. And I think without being forced into trying to find another way to work and another way to communicate, there would still be a distrust of those sites, because you would be looking and going, well, why do I need Zoom? I can just call Rebecca, or I can just type a message into a box. Whereas now, people are, like you've said, people are used to using it, so they will, and they kind of trust the service more, because they trust the service that they're using to communicate, and they can now see the person that's saying, hello, we are here for you, and we will answer as many questions as you have that relate to your investments with us. And I just wonder how many clients, again, might be watching this that don't necessarily get that service. So I would recommend that they go to their providers, or their financial institutions and financial houses, and ask them whether there are any other services, like, do I get 24/7 access to my financial data? Can I set up direct debits from like online? Can I make withdrawals through the online process? And I'd be inclined to say that probably not. There might be a small element to it. Yes, you can put your name in and we'll send you out a paper package. Like, well, not really the same. So I do think we should really make more, just light bulb moment, marketing team, of what we offer as services like that now to the clients that we have. I think we're kind of coming up to the hour, really, and let's face it, I would just sit here and chat to you guys all day, but we do have some work to do as well. It is Friday, but what I'll say about changing data is, so I'm going away this weekend. I'm actually going abroad. And who booked the flights? Hello. Who put all the information in? Hello. Who spelt our own surname wrong? That will be me. So yes, I came to check in last night. I was like, oh no. So that 15-second call answer, the airline that I had to call, in fairness, because it was about 10 minutes to them closing, and I just thought, I need to do this now. But I did have that dread, kind of your stomach sinks and you think, for something so simple as that, I'm going to have to wait 20 minutes or 30 minutes or whatever to try and get through. And I think giving people the confidence to know that we are here to answer your calls and your emails via the app, via the services that we have, is testament to what True Potential wants for its client base, which is to close the savings gap, to give clients the ability to self-serve, to close the savings gap for themselves and provide for themselves a better future. But Jenny, you're in the office. How are you finding it?
I've been in a couple of times this week, mainly just to get away from the dog, to be honest. I need that break. But yeah, no, it's brilliant, to be honest. We had a lovely demonstration of kind of how to go around the office, so we're taking everybody into consideration. We're not being, like when you might go into town, people are just barging past you. It's a very sense of, try and keep 2 meters apart. We've got some lovely face masks for when we're walking around the office, demonstrated just there. But yeah, getting our temperature taken when we come in. There's hand sanitizers pretty much everywhere you walk, and I feel absolutely safe. There's no dread of thinking, oh God, like what's it going to be? Are people going to take this seriously? I think we're all on the same page, and I don't know about anybody else, but I'm actually really looking forward to, having a bit of an ounce of normal life. Because I don't think, structure, away from the dog, away from kind of home. Whilst I think, we've done great in lockdown, trying to separate home life from, working life. For me, it just, I love being in the office. I love seeing faces. I love speaking to people face to face as opposed to via email or, so yeah, I'm very, very excited.
So George, when are you back in? Because Becca and I are back in the same week. I say Becca and I, she's going to be on her own because I'm on holiday, if I manage to make it onto the aeroplane, because who knows who's going to turn up with my passport. But yeah, when are you back?
I'm back in on Monday, so I'm looking forward to it. So we're what we're going to do in the weeks we're back is more project based. So give us a chance to get together, thrash project ideas out, and then the time which we spend working away from the office, we'll be able to get our heads down, quiet, and get on with that. So we've been productive. It should make us even more productive. But I'm looking forward to seeing the team. We have morning, afternoon meetings where we're on Teams, we're on Zoom. So we get to see each other, and there's been some funny stories in itself from those video calls. But just looking forward to seeing everyone.
Point to note though there, George, you did say the productivity is going to be even greater. I don't know whether we should ask Graham to edit this out because this is going out to the public. So they're going to be going, great, you've kept right on top of my investments. What am I going to win now? So you've only got yourself to blame for that one, George. So Becca, you've been going into the office fairly frequent. I say frequently, I don't mean as in like every day, but more frequently than certain we three have.
Yeah, so we've our team's actually continued to grow throughout lockdown. We've continued bringing in new clients, and as such, we've had to hire more staff. And I think very unusual to be in a situation where you're joining a new company and you're meeting your colleagues for the first time on a video phone call. So we've been doing the occasional day in the office throughout last month with some of our new members of staff, but also some of the the older faces, not older faces, nice youthful faces.
Go for it. You were saying things were old-fashioned earlier. Just go for it.
But more experienced members of the team, we'll call them, in the office, just so everyone can get to know each other, and it's been lovely seeing everybody's faces together again. And the week we're due back in, we commence on the 14th, so we're going to have the full department there, and I'm really looking forward to it. I share what you're saying there, Jenny, about not getting away from the dog. Mine's on the dining chair beside me. I'm praying that the postman didn't come whilst you're on this call, because you can see I pop up and start off, which has happened during a few phone calls. But yeah, really looking forward to it.
Yeah. I was as well, until obviously we looked at the rota, and then I'm off the week that we're in. I think because I will be back from being abroad again if I get to go. I think I might pop down anyway, because you're right, it is nice to see people, although I think I mentioned in a podcast earlier on that the development team, it's kind of out of sight is out of mind, so we're not getting as many. We can just get our heads down and get on with things. So yes, George, you're right, productivity does go through the roof in that vein, and I think that's going to change the week that we're in, because I was in head office not yesterday but the day before, and I had a meeting with Dan, and he was 20 minutes late for the meeting. And that's because this is the first week back for some teams. It was that thing where you see people in the kitchen or around and about, and you're like, oh, I meant to ask you. So you forget. So with the development team, nobody's going, oh, can I just ask? Because they're not there to ask. But then Dan was 20 minutes late for saying, 2 minutes, I just need to speak to you about this, and I just need to speak to you about that. So we're sat going, where is he and what's he doing? And that will be a symptom of, I would just say, have a buffer either side of meeting times when you are back in the office, to allow people to be late and then your meetings to overrun while people are catching up face to face. It will be really lovely, because you do, as much as you get comfortable in your surroundings because you have no choice, just to go back to something that, again, you were comfortable in and you knew so well, will be really nice for people to be able to do. And I think knowing that it's kind of in then not also gives people the ability to understand that they're going back to the level of like quiet and production that they need from their homes, and back to the dog, because you might whinge about them now, but the period when you're in the office, you'll be like, oh, but I'm missing them, and then you're like, oh, here we go again.
I actually, whilst I'm complaining, I called into the office for a couple of hours the other week, and I took her with me. So I will definitely miss her when we go back.
George, are you going to miss anything about being in the office for a week?
About being in the office?
Yeah.
I don't know. I quite like. I've been going for a bit of a, more of a walk in the morning, or a run, and getting
star jumps.
It's star jumps, but especially when it's. We've been blessed with the weather, so it's been nice to sort of take away the commuting time and get your head down, and then you can spend a bit more time in the sunshine. But I don't
You're
know.
going to miss the sun. George is going to miss the sun. See, we're back to the weather, aren't we? You see, good weather, no aeroplanes equals good weather, but means people can't tell you that it's going to be good weather because they can't get the data from the aeroplanes because they're not flying. See,
Well, Di, if you get to go, you can just tell her what it's like. Send her back what's going to come our way.
I will. I'll update you on the apps. We can have an app for the podcast 33, which was commonly asked questions. So I think on that note, I shall bid you all farewell. Say have a good day. Thanks to everybody for joining us. So from me and the team, have a good Friday and have a lovely weekend. I'll see you all later.
Thank you.
Thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.